Welcome to Elementary. I hope you're having a fabulous day from wherever you are. It was such a gorgeous day. I just thought it was a beautiful day. We're going to talk about mortgages today. And I have a guest. You know this guest. You've seen them before. And so I can't wait to get this conversation started. It's a long awaited conversation. And I know most of you are probably because it is a hot topic. And a lot of people are inquiring about, hey,
Hello. Can you see me okay?
yeah, I can see you.
Excellent, excellent. I think I'm having a hard time seeing you, but it's all looking good. How are you been?
I'm good. And you?
I'm doing better. Doing okay.
It's a strange market, aren't you seeing the same, or am I? You're probably
Yeah.
have a different market than me.
Um, of course, yeah. Obviously, we're seeing a little bit of an uptick in May, which is good, but overall, year over year, we're very down compared to other years. So it's a trying time for a lot of people in that
Yeah.
that are around real estate or mortgages.
Yeah, for sure. So before we get started, like maybe tell people who you are and yeah, tell them a little bit about yourself. They know you already, but just tell them in
Sure.
case you have a new viewer.
No problem. So my name is Mani Najafi. I'm a mortgage agent here in Ontario. Obviously, I help most of our clients when there's a purchase or a sale when it comes to porting their mortgage or getting a new mortgage. But lately, I've been doing quite a bit of strategizing for clients that have already purchased but are not willing to or not able to sell their current property. So I've been a strategist and therapist sometimes, but working
Yeah.
around mortgages. Yeah.
Yeah, perfect. Yeah, and so that's kind of what I wanted to get a little bit into. I mean, while we see a lot of the same things, you probably see a lot more of some other stuff that we're going to talk about today. So for all of you watching, if you have any questions, there's a question icon. Feel free to drop a question, and we'll try to get to it before the end of the show. So current market, what are you seeing in the current market?
In the current market, what I've seen is, fortunately, condo market is not moving as it should be. Even with a big price reduction on some of what my clients are basically fire selling their condos to sell them,
Mhm.
they're still not moving. Part of it is, I think, the general mindset that, hey, condos right now are maybe not the best investment, which I don't agree with. I think there's room for condos to be purchased. It's a great opportunity to pick up a home, especially for your first-time buyers or newer buyers with their limited budget. You may actually price yourself into an area that you wouldn't really like for a condo for. So for an end user, somebody that wants to move into a condo, it's a great time, great opportunity to get a really nice condo. What I've seen quite a bit of, a lot, is a lot of semis and detached homes that are being sold. Some of them have multiple offers that, from what I hear, which I'm sure you know more about, particularly in certain pockets of the city. In Richmond Hill, Markham, surrounding areas outside of Toronto, there are some sales that are happening. Nothing crazy like we've seen in the previous years, but compared to some of the months that we just went through, there is a little bit of an uptick. So I am seeing quite a bit. However, I've seen a lot of purchases, but not as many sales. So a lot of people that were counting on selling their property at a certain level to come up with a certain down payment or certain budget. That's the part. The second part is what I'm seeing. It's falling a little bit behind. You would think with purchases, there's also a sale on the other side, but it's not really happening because a lot of people are looking to upgrade or upsize. So selling their
Mm.
condo isn't really happening, but they've already committed to purchasing, or they have a pre-construction that are coming up. And I am seeing a massive amount of inventories that are coming up for closing, so pre-construction that are now ready to take
Yeah.
ownership. But we have a massive shortfall. And I think the last stat that I saw, you might actually have it more, but we have up to maybe 30, 40 months of supply, is what I'm hearing.
Yeah, yeah, you're right. Well, for that's quite a bit of what I'm seeing now when it comes down to Richmond Hill. Of course, God bless those Persians for cracking open their purse strings because when everyone's running in the opposite direction, they want to buy. They can smell it. But you're right. The market is strange because I think people are thinking a condo market is not a good market, and that's kind of a real misrepresentation because I think the condo market, this is like a really, really good time. Now, maybe I think there are some pockets where there's a lot of brand new condos, and those ones, the price per square foot that the person paid coming in, they're probably going to have to take a little bit of a beating on those, right? And they're not going to make money. And even if they pay money out of their pockets, I'm hearing people that tell me that they're paying for like at least $1,000 or more of mortgage out of their own pocket because they can't collect enough to cover the condo anyways. And but then even when they sell, they're probably not going to. So it's about, what do you want to, how do you want to move it? But
Yeah.
having said that, I really think for some people, like this condo, taking advantage of the condo market is really, really a good opportunity.
Yeah, absolutely. I think so. So
And
I
yeah,
yeah, sorry. What I was going to say is you're absolutely right. I mean, there's a lot of good opportunities, and I think the people that are generally getting scared from maybe purchasing a condo, thinking it might not be the best investment, even though it's the best thing for their budget. It's the same people that would have rushed to buy a home
yeah,
regardless of whether they can afford it at the height of the market. So a lot of people
that's right.
did buy it thinking, "Hey, I'm going to get this, sell it, make a quick buck." And as you and I know, real estate has never been a
Yeah,
quick in and out game. So a lot of people were either misled or they were not looking at the right numbers or assessing their situation and their financial situation greatly because a lot of times where clients do come to me and they are looking at purchasing an investment property where they're renting, my first question is, hey, what happens if you cannot find a renter for six
yeah,
months? That was
yeah,
always my question, even before the pandemic era, because it could happen. You could
yeah.
get a property that no matter what, you just cannot rent it for a price where you would even break out even or have extra money in the pocket. Somebody who's looking to have an investment property should number one have good cash flow, particularly if something goes wrong, if your washer goes, if the roof goes, you need to
Mm,
have some money on the side. It's not just about vacancies. And a lot of banks are actually gotten quite smart. Almost every bank now has a rental calculator where they eliminate right off the bat the fees for
mhm.
vacancies, insurance,
Oh,
repair,
wow.
different things. And some of them actually go as high as claimed insurance and claimed maintenance. So if you're the kind of person
Mm,
that likes to, write a very high maintenance to combat your costs, it may come down the line and it may not even out. So don't always count as to one to one. No bank looks at rental payments
mhm.
versus rent coming in one to one. Not a single bank. If anything, they might even reduce it by upwards of 50%. Okay. So
Yeah.
number one, you have to look at it that way. Number two, I think it's still a good opportunity if you have the cash flow. Properties, again, they're always good, right? We're just going through a bit of a tricky time in the market.
Hmm.
But as an investor, you should be looking at the overall gain that the property has over a long period of time. What is that property going to be worth to you in 5 years and 10 years? That's where the real money typically was always with investors. I know we went through a period where rents were not too high, but because the interest rates were so low that with the mortgage payments and some of the carrying costs that you had, there was a bit of a proceed where you could have pocketed, 500, $600 a month on that property. We're no longer in that time where if you're breaking out even you should count
Hmm.
yourself as one of the lucky ones. So I think the real opportunity is the growth in the property value over a period of time, right? Or if you're an end user, if you're looking for yourself, a spouse, even a family, if you guys want to pick up a nice condo, I feel like if you may have been priced out of a certain area that you liked, those
Hmm.
areas are now available to you. So I think a lot more people are looking at some of the areas where generally they didn't think they could qualify
Hmm.
for, and they have been
Hmm.
qualifying. At the same time, rent's been decreasing a little bit in some areas. It's kind of counterintuitive with the number of people that we've had moving to the city, but rent has been sort of fluctuating a little bit and it's been sort of keeping steady. It's a little bit lower than what it was a few months ago for certain types of property. So that's also not helping with your pocketbook if you do have a property that you're carrying. First suggestion, if you already own a rental property and some of your costs are a little bit too high, I would say look at when you first signed that mortgage, when you signed that
Hmm.
term. If it was anywhere from 2019 to I'd say even to the end of 2024, there may be an opportunity where someone like myself can look at your numbers and say, hey, even if we break this mortgage, even if there's a
Oh,
penalty,
too good.
is there some cost savings to have on your monthly budget, right?
Yeah.
Again, you have to look at your monthly budget from a month-to-month carrying cost. You shouldn't look at, hey, what's this going to cost me over a year or this and that. Look at what your monthly carrying costs are because it's sometimes it's month to month, right?
Yeah, no, for sure.
Yeah, that's the first thing is. But I still think it's a good opportunity.
Oh, for sure. I agree. I agree. And I FOMO is real. FOMO is real because people are strange. Like when everybody else is jumping on a bandwagon, everybody is out there. Even people who probably are struggling to with certain price points. I mean, now is the best time to get because you've got so much of choice, right? But it's weird. I mean, I'm showing homes I have, but the ones who are kind of sitting on the sidelines too think that the market's going to go back to heydays, and not Ray days, but heydays. But you know what I'm trying to say is like they think the market's going to go back to that. And at some point, maybe it will, maybe it won't. But while you're waiting for that, what else is going by you, right? Because the market could go even lower.
Yeah.
And now, if you were already struggling, whether you're getting older and you're struggling, or whether you just need to get out of the house and buy something maybe a little more manageable. Either way, if you buy high, you sell low, you buy low. If you sell high, you buy high. It's all relative to where the market is, right? So, refinancing, what are you seeing in the refinancing area?
Quite a bit actually. So one thing
Mm,
is that a lot of the other you have to also consider the overall picture of what's happening in the market. So
yeah,
we've had an increase in cost in almost everything. Pretty much
yeah,
every single item that you need from a day-to-day stance. You so those costs have gone up, but at the same time, income has not gone up by the same level.
yes.
We've had
Hmm.
inflation go up. So the first thing I would look at is, does your monthly budget, does it account or do you have enough money for savings? Right? When I ask that question, a lot of clients are like, yeah, of course I have enough for savings. And I'm like, yeah, but are you only just making minimum payments on your credit? Because the interest that you're getting on your savings is far lower than the interest that you're giving
Hmm.
up for your credit facilities.
Yes.
So whenever I usually bring that up, and I would say, hey, you guys have owned your home. Depends on how long you've owned your home, how much equity was built in it. Did if you signed up last year at 80%, it might not be the case for you. But again, it's my job to actually review and assess your case by case. What I always say is, hey, you built some equity or you built some savings, if you will, in your home by being a good person and making your mortgage payments every month, and you're trying to do the right thing by making payments to all your credit facilities, but you're just making the minimum payments, and it feels like you're just literally stuck in mud where you take one foot, you put it down for like a little bit, but you're still sinking in the mud. So why don't we take your current mortgage, take some of the equity savings account that you built in your home, use that to pay off some of your credit, restructure some of your debt. That way you have one nicely manageable payment, right? In the banking term, I'm an ex-banker, so in our term is called consolidating the debt. So you consolidate into one payment. Typically, your mortgage payments are going to be far lower than any facility that's out there. Your credit cards are at 21.99%.
Mm,
Your lines of credit, or if it's unsecured, you're looking at anywhere from, if you had it from before, 8 to 15%. But your mortgage right now is like low 4%, mid 4%, right? So if you can restructure some of that debt, re-amortize, or stretch it out a little bit longer, you don't have to necessarily go up to 30 days or 25 years. You can just stretch it out a little bit more where your monthly payments become a little bit more manageable, right? You can consolidate some of that debt. That way, you're not just trying to breathe every month where you have a little bit of a leeway. Now, with that refinance goes, okay, let's pay off some of these things, make it one easy payment. Let's leave some room for you to put away some money for savings for a rainy day, right? And again, I help you look at the overall picture. Sort of, again, goes back into my banking days as a financial planner, where I say, hey, let's use your biggest asset, which is your home, and use it to get yourself into a better financial situation. And then obviously, I would recommend closing or just cutting up those cards, right? I always
mhm.
don't like to close credit if you don't need to, but I say
No.
put it to a point where I've literally had a client cut off their cards because I'm like, don't get rid of that credit. You may need it. It's always good to have some of that credit. It's easier to keep the credit and not use it and apply for the credit. Don't put yourself back into that hole. Let's find a different way. So that's
Yeah.
typically why you would do a refinance. The second reason why people are doing the most refinance right now is because they are essentially taking out the profit from their property in order to buy the second property.
Right.
What I mean by that is you own a condo.
Mm-hmm.
I'm just going to use some round numbers. $500,000 condo, you just could not sell it and you don't want to fire sell it for $350,000, right? But you need that extra bit of $150,000 from that property in order to get your down payment for your next property because you have already signed for it previously thinking you're going to sell, or the pre-construction that's coming up due. Now, if you cannot sell it, there's no way for you to get that money out of that existing property. So what you can do is you can refinance it to whatever, typically up to 80% of what the appraised value of that property is, assuming you can qualify. And what I normally do is I take out that money and I run a simultaneous application that if you turn this current property into a rental while you're keeping the asset and growing your net worth because you're not selling the property, we can take some of that money out and essentially take the equity and put it towards a down payment for your next purchase. Okay. Now, what is that going to do? Number one, it's going to alleviate you from having to sell that property, and you get to keep an appreciating asset that you would have as part of your portfolio, right? You don't grow your portfolio or your assets by selling assets off. So first thing is you get to keep it. You get to rent it out at the average market value of what the rent would go for that area. And typically you don't need to have it already rented out. There are fair market reports and certain banks will allow it where you can use future rent income to offset some of that cost. And then you can put some of that money or cost towards your new purchase and you get to keep both, right? While you're still maybe looking at either selling that other property if you can. If you don't end up buying a tenant, then you can always look at selling it later on, or you're not in a rush situation because you're hitting a deadline with your purchase. And that's the second reason why people are taking a refinance.
Okay. So I actually goofed again because I responded to a comment that someone made.
Yeah.
And so now I can't see the comments. So I'm going to have to ask you
Yeah.
to kind of keep an eye on the
Yeah.
comments coming in case someone has a question.
Yeah, so it says H and Hoke, it says selling one of my investment properties to pay off the debt and leveraging for the next deal. That's an example. That's exactly why somebody would refinance. Now, ideally, you want to have your sale take place before your purchase, so you know your numbers, you know what down payment you have available. But what I'm finding is a lot of people did this for pre-construction units 2-3 years ago, and now the situation is a little bit different. Maybe they have a lower income job, maybe they don't qualify, maybe some of the fees and levies that the builder has built in are a lot higher because you didn't cap your fees and whatnot. There's a lot of situations why right now might be different than what happened. So you got to refinance. And where I come in is I look at the full picture overall. Like even if you have a property coming up in 6 months, I always ask you, hey, do you have any other purchases coming up? We don't want to do something right now that's going to jeopardize that or vice versa. So let's look at what are the options on the table and I put everything on the table and say, this is your option A, this is your option B. With this one, you get to keep both properties. With this one, you have to sell at a fire sale for this price. So again, there's a lot of, everyone's situation is a little bit different, but
Yeah.
you just got to figure out what works best for you and something that does not kill your budget overall.
One thing I just want to tell you, if you can move your camera a little further away from you.
Yeah, sorry.
Yeah. No, I'm just kind of so people can see you
Head.
fully.
I know
Perfect.
I'm a floating head. I've actually gone that before. I do have my gimbal, but
That's okay. That's fine. That's fine right there. Perfect. Yeah. So, you know, I agree that sometimes people have to, really think about this whole refinancing issue. But the one thing I will say is there's some people who always seem to get into the same sort of trouble, where they're using their current home as an ATM machine. And, while it's fine, it is what it is, but sometimes it becomes so much that I think they allow it to get away because they're like, I just want more thing. But it is kind of an interesting market we're in. And, I feel this is one thing I want to say is that people shouldn't feel like maybe there are no options. Maybe there are no options and we can't help you. But I think what then happens is people are waiting so long in this market before they actually ask for help or look at options for help.
Yeah.
People that are struggling, right? And that's kind of where I've noticed, I don't know, in the last 10 years, I don't even know if we saw power of sales come on, right? But now we're noticing them, right? Yeah. And
I've
more
seen
than just one or two, right?
yeah,
So
I've seen a
it's,
lot because obviously, we have realtors that reach out to us and say, hey, do you have any buyers for these types of properties? And I see quite a bit. Typically, when I see somebody getting into trouble, so I was asking, was there any circumstances outside your control? Was there a death in the family? Was there a job loss? Was there anything that kind of put you in that situation? If you're habitually always at that red line, then it's a question of
Yeah.
whether you are good with, I hate to say good with money or good with credit, but do you have a plan or do you have a budget, and how often do you stick to it or not? Because you can have the best plan and best strategy in the world. If you step outside those lines, it's sort of a moot point. So if we
Yeah.
refinance your property to pay, as I mentioned, if we refinance and pay those credit cards off, but you continue to using the credit, well, now you have both debts that are going up, and then you
Hmm.
don't have a situation like that. You don't have a get out of jail card with the existing equity because you've
Yeah.
already used it, right?
Yeah.
So
Yeah.
my suggestion overall is, hey, let's look at your finances. Let's figure out maybe the house that you have is too much house for you, right?
Yeah.
Maybe the payments are too much. If you want to live in Rosedale, but your budget only allows you to live in certain parts of Markham, let's reconsider that.
Markham's pretty nice,
Markham
but
is
I know what
great.
you
Markham
mean.
is
Yeah.
great, but I'm
Yeah.
just talking the difference in prices, right? It's always
Yeah.
nice, like, if somebody wants to live in Markham, but if they can't afford Markham, they have to go a little further out. And
Yeah.
that's
Yeah.
okay.
Yeah.
You don't necessarily have to buy your forever home right away, right? You have to work your way up to that nowadays. And the second thing is always adhere to your budget. Ultimately, your budget will speak louder than your actual action. So if you're redlining your credit cards every month and you're going over the limits and going over that, over time your credit bureau will show that, right? It's
Yeah.
it's not just missing payments, it's high utilization. High utilization, having your credit facilities at over 75 or 80% of their limits can affect your credit score over time. And I've had
Hmm.
situations where even though the clients were very good at making the minimum payments on every credit card, they started noticing a decline in their credit score. And that's because they were just making
Hmm.
payments of their minimum, but they were slowly, the interest was compounding on their existing balances, and it was going up. So we had to come up with a more drastic plan. Now, there are situations where refinances might not work, sell might not work,
Hmm.
downsizing may work better, or in a situation where people need to buy the other way, where they need a little bit of help from family and whatnot. Situations are different. Don't wait till you're absolutely out of option to get help. I'm
Yeah.
early. If you don't like what I have to say, you don't have to go forward with it, right?
Yeah.
If you,
Yeah.
right, if you think the other plan might be too much for you, and again, nothing happens without your permission. Obviously, we give you all the numbers and we'll say, hey, I always, you've seen me, I always give my clients a couple of options, and I say we have option A, you have option B, and you have option C, right? And I would give you my opinion. If it was me, it was my money, it was my sister, my brother, whoever it is, I would have gone with this. But you have all three options. Here's what A will get you. Here's what B will get you. You make that final decision. And if you decide to walk away and say, no, I've seen it, I've considered it, but I don't like your point of view, no, thank you very much. I say, no problem. You walk away, I walk away. Right. But at the very least, you're taking the time to look into your situation and not just throwing your hands up in the air and saying, oh, it is what it is. I can't do anything about it. Bankruptcy is my only option. And I've seen that
Yeah.
happen. I've seen the
Hmm.
client come to me like minutes away from pulling themselves through bankruptcy, and short conversation with me. A week later, we have a solution on the table.
Yeah. Yeah. And that's what I think, this is where I want to tell people, it's not the end of the world. Don't bury your head in the sand. I did actually the Globe and Mail, I think you saw that article where the Globe and Mail
Yeah.
interviewed me for like an article that they were doing about people that are downsizing to save money. And I have a lot of clients in that sector where they downsize. But in this case, the stories were a little different. They were not happy with it. And the common denominator is they don't do enough of asking questions. They don't do enough of answering the questions. They don't do enough of like legwork before they start the process, whatever process. And so sometimes I see it myself. People are struggling with the money piece and they leave it to the end. It's like almost like, oh, I don't know, maybe I'll manifest it. You know what I mean? Which is great. Maybe you will manifest it. Maybe you will win a lottery. But at the same time, you also have to be realistic on where, you need to take things. And I think you also have to help yourself, and perhaps you'll manifest a solution if you help yourself, if you ask some questions, if you say, hey, what are my options, right? Because there's always options until there are no options.
Absolutely.
So,
Yeah.
yeah.
And I
So
always
with
ask,
renewals, sorry, go ahead. Finish.
I was just going to say, always ask questions. Work with someone like myself. I work for the client. I don't work for any lender. So I don't have to appease some of my bosses with my paychecks. So, you ask somebody who's going to give you an honest opinion, not an opinion where it's going to benefit them or someone that they work for. Okay. That's number one. And asking questions about money, particularly with mortgages, people feel like they should know this because it's a mortgage. I get money from the bank and I
Mhm.
make my payments. But it's a funny analogy that we have in mortgages. We say mortgages are like a fridge. You know how a fridge works, but you don't know how to fix a fridge and take it apart, right? Most people know how mortgages work, just like a fridge. You put food in the fridge and it stays cold. That's generally the general knowledge that people have about a mortgage, but the inner workings of a mortgage and how do we fix it or how do we change it, they're not aware of, right? So ask your questions, get the help, and just it will ultimately help you get more knowledge for yourself in the long run,
Mhm.
right? Especially with somebody who's open like myself to like sharing the situation, why a certain situation is like that, why a certain lender might be asking for this or that. This that way will broaden your knowledge as well. So down the road, you are able to make better decisions for yourself as well. And learning about money is like going to school. There's always something changing. There's always something new. So it's always good to stay, stay ahead of the curve
Mhm.
and happening in the market.
Yeah, no, for sure, for sure. I'll be honest with you. I'm surprised on how many people have no clue about the kind of mortgage they have and what they've picked. And I don't expect them to. I understand, like even if maybe if I was buying my first home, or when I think back to when I did buy my first home, what did I know? Like I'm like, oh, I got a mortgage, kind of thing, right? And but now with all of the, but then again, there was not all this education available. Like people would just go to the bank, get a mortgage, get a blah blah blah, put it all together, and away they go. And now there's so much stuff available. You can get so much information. So I think, readily, like good information and bad information, but at the same time, you can, right, get information. And so I think people should really kind of like before they just jump in with both feet, understand what they're getting into. Do you know how many times I ask people, hey, how much do you want this mortgage? And then they look at me going, oh, damn, is that a trick question? I probably knew you were going to ask me that. But,
I,
like how am I going to tell you what you're going to max, like, what you're going to do? Like, especially for downsizers who are looking to sell one and not get a mortgage. But if you don't know what your mortgage is and what you're paying off, how can I make that miracle happen, you know?
yeah. A lot of people don't know the terms. Like again, I ask a lot of questions. Like people call me, "Hey, I need to do this." I'm like, well, "Okay, well, what's your penalty? What kind of mortgage do you have? If you can port it,
Yeah,
then you can
no
do this, or
clue.
you can do that." And then sometimes I back off from asking the questions because they are so out of their depth, and then they're like, "Oh my God, maybe I should have known these things," which is okay. It's okay not to know these things, right? But that's why people like myself or yourself they exist. There are experts in the field that you can get help from who are people are 100% rooting for you, right? That's why there's like different solutions that we can provide that could have various people or lenders involved. And back in the day, I've had clients where they're like, "Oh, I got my mortgage 10 years ago, 20 years ago." And 20 years ago, some of these lenders didn't exist, or they did exist
Yeah,
in the format. There are just so many new products and new
yeah.
regulations, different things and for every level, whether you're the first time buyer to somebody who's looking to downsize or somebody who's just looking to get money out with a reverse mortgage because they're in their 60s or 70s and they don't have any income. There are different products, there's different types of lenders. There's lenders for business owners who don't file their taxes every year or their business is less than 2 years. There's lenders for, like I said, the elderly who have no income. There's lenders for building. There's lenders for, doing improvements on the home to bring the value up. There's so many different things that you can do. So, going to the right people, getting the right questions answered, or ultimately come to me with an end result, and then I'll tell you how we can get there, right? Same as somebody comes to you and says, "Hey, I want to buy a home." I'm like, "Okay, let's ask a couple of questions and see which route we need to take to get to that destination."
Yeah, it's kind of strange because I've been finding a lot of people. Actually, I've been finding a lot of people. Well, the other day, someone got in touch with me, and they're like, "Oh yeah, I'm looking to buy a home with zero down," and I'm not sure where they got that from. I'm like, there is. They're like, "Yeah, yeah, someone told me I could," and I'm like, "Who?
Yeah,
Who told
yeah.
you?"
There's
right?
chatter. I see all kinds of things in
Mm-hmm.
forums. My suggestion to forums is take everything that you read on those forums with a grain of salt. There are situations where it could apply to you, but it could not. Right. So it's good that you're picking it up, but just ask the questions. And I've seen 0% down, this and that, or I've seen a lot of wrong information, and from people that should know the answer. Like, I'll be surprised. There's at least one or two mistakes on so, for example, a lot of people going, I love mortgage brokering. I see experts who should know what they're talking about, a misleading answer or an answer that doesn't apply to everybody and just in that particular question, but they don't make it known so that it's that particular question. So
Mm-hmm.
it's good that people are looking around. Sometimes you can, just like any information online, there's good and bad or just things that don't apply to you. Again, it's good to get informed, take some of that information and just still work with somebody who understands the situation, who can decipher that information from what applies to you and what's something that should not cloud your mind. Because I've had clients where they get the wrong idea in their head and they're just so married to that idea that whatever else you tell them seems
It just,
important
yeah.
to do that, right? So just be open to new ideas and different things and just realize that, hey, it's a moving target when you're buying a home. It is an ongoing process all the way from meeting your realtor to getting a pre-approval done to finding the home. And you have to be able to have a plan that encompasses some of the ups and downs that may come in that process, ultimately for the betterment of buying a home and having our own home ownership. So
Yeah.
things do change, things come up and down all the time. So just as long as you're aware and you're working with somebody who's willing to go through those ups and downs with you, to give you the time to explain the things to you and just give you the level of time that you need. You could be proficient, you could know a lot of things, and things could move a lot faster. Or you could be brand new, first time buyer, never even held a key of a home in your hand, and just starting the process early, very early.
Yeah, for sure. So when it comes down to renewals, I know 2025, 2026 are going to be the biggest years for renewal.
Yeah.
And so I was hoping that maybe you can give people some pointers on how to manage and prepare for either 2025 or 2026 and what they should do.
So, first of all, you should start to first of all find out when your renewal is exactly. Right, a lot of people are not aware. It should be in your original documents that you sign or your annual mortgage statements. Some banks have only annual, some of them have it monthly. It will tell you as to when your term expiry is and what the remaining amortization is. Right. First of that's the first step. The second step is, okay, mark it in your calendar 6 months before that date where you start to engage a mortgage broker. Typically within 120 days or 130 days out, you can start the process where you engage a lender to start that renewal process for you. Now, your bank will offer you a renewal typically. 9 out of 10 times, there are times they don't offer it to you, but that's a separate case. But 9 out of 10 times, they'll offer you a renewal at a certain rate. Now, I wouldn't take that rate right away. I would take that rate, give it to a mortgage broker and say, hey, is this a competitive rate in the market? Sometimes it is, sometimes it's not, right? So that's typically where you would start. So you start using the time and the market to your advantage. Now, if as you get closer to your actual term expiry date, if rates are going up, right, which we've seen happen before, but not recently, but if rates are going up, if you had started early on, right, and you had an application into a lender, then you guys are covered because that should be the low rate. Now, if rates start to come down as you're getting closer to your closing date, most lenders will allow you up to a certain date that's remaining, will allow you to do a float down or get that rate at a lower rate. Essentially, get that commitment at a lower rate. So that's typically it. So it becomes a rate game. Now, I use the opportunity for renewals to do another overall financial check. At time of a renewal for a term, that's the best time to look at whether you want to add a line of credit, make your mortgage payments, take more money out of your property with a line, or even adding a larger mortgage to take out some hard cash, pay off some debts, look at future investment opportunities, look at other things. And that's usually a really good time as well. because number one, your term is coming up, so there might not be a penalty or anything. And number two, typically, again, good opportunity, and you can use it to go to a different bank or take money out of your property. So if something major is happening with your mortgage, which your term is done, it's a good opportunity to do a health check with your overall finances.
See. So as we wrap up today, is there anything, you want to touch on before we wrap up, or did we kind of capture it
No, I mean,
all?
look, I think ultimately it all comes down to have those conversations, take the time, have the calls. I know it can get a little bit tedious sometimes talking about numbers. It could be overwhelming for you. You may not feel like it's necessary. Oh, I'll just renew with the bank, whatever they give me. I think it's okay. I've been making my mortgage payments. It's not a problem. And that's well and good if you're the kind of person that's good. But I cannot tell you how many times I've come across clients just like that. With a 5, 10, 20-minute conversation, we were able to change a lot of what the budget looks like, right? And ultimately, take the time, do the right thing, work with people that you trust, and that way, ultimately, when you make that final decision, you're 100% okay with it, and there's no doubts that you made the right decision.
Yeah, yeah. Well, I think people need to do just that. Sometimes I think people get lazy and they don't want to go and find people. You know how many people they just get, sometimes, it's like, oh, do I have to go get all this paperwork and give it to someone new? But they don't realize how much, perhaps, maybe you'll save nothing, maybe you'll get nothing, right? And that's okay, but I think it's worth it. It's no different than doing like that insurance check. I
Yeah.
did a story earlier on this year that to say what a shock I got for my insurance. And I'm like, I have no accidents, I have no issues, but the insurance company, I think they just goofed. Well, my husband's car was stolen, so I think they were trying to take it out of mine. If you know what I mean. And
The
I
company.
think they thought I was just, yeah, they thought I was going to roll over, but it was like a shock. And then I kind of fought them all the way, right? I'm like, no, it doesn't make logical sense. You tell me how this makes sense, right? But it's like one of those things, right? Because every year I say, hey, I'm going to go and check insurance no matter what. And I got lazy. And you see what happens when you get lazy. You just take, like people will say, oh, maybe we should just take whatever we give her.
Yeah.
Right? And so I think it's so important to pay attention and do what's right for you and your family.
Yeah,
And if
absolutely.
nothing,
Look,
yeah,
complacency is not our friend, whether it's
yeah,
your finances, your insurance needs, your health, right? A lot of people are like, I hate going to the doctor every year. Well, it's something you should do because you never
yeah,
know. Right? In finances, look, mortgage is one of your biggest payments, right, that you do make. Obviously, it's one of the best payments because you're putting a roof over yourself and your family, and you're almost paying into your whatever you want to call it, your savings account, your retirement.
the
It's a
future.
lot of things
Yeah,
combined together, right? So
nest
you
egg.
do want to take the time, and that's why you do have brokers or realtors or insurance brokers. There's someone else that's rooting for you that understands the market, that knows they're not working for an individual, but they're working for you with all the various banks to try to get you the best deal. And ultimately, if you trust them, if they're doing the right thing for you, then you are going to come out on top. And even if it means $100 of savings a month, sometimes if that amount of money is worth it for you. Sometimes it's not, but you're still doing the right thing by having a second check.
Yeah, for sure. So where can people find you?
Okay, well, it's really easy. A lot of people talk to me through Instagram, which is Mortgage Money, or they call me 416-399-1993, or they email or text me. So those are email is money at northpowermortgages.ca. Best thing you can do is give me a call. Conversations are always easier that way because we can troubleshoot a lot of things going back and forth. Or they can schedule a call with me. As you can see, at work, I'm not a bank. I'm open virtually all day long.
Yeah,
Right?
he
So
answers the phone. Yeah.
like a long 5 o'clock, that's stop with everything. Or even on the weekends, right? Whatever works for you. But phone and text is the best. 416-399-1993.
Perfect. Well, thank you so much for your time today. I really, really appreciate it. And yeah, until next time, perhaps we should do another session soon, once the next announcement or something, see where things go and where the market goes.
Yeah, I'm hoping the next announcement would be a good one with a lower rate. We were
Yeah.
expecting it for June. A lot of people were expecting it, but Bank of Canada didn't budge. But I think this unemployment will maybe force their hand. We'll see.
Yeah. Yeah. Ugh, tricky times is what we say, right?
Of
Yeah.
course.
All
Always
right.
nice to talk to you, Jacqueline.
Thank you. All right. Take care. We'll see you soon.
Good night.
Oh God, I don't know how to undo this. Oh, I don't know.